beside Gideon Bradley.
Welcome to This Week in Real Estate with Jonathan Harmon and Bryan Nale, your local experts on all things real estate in Middle Tennessee. Listen in as they discuss the current state of the market, the latest trends, and have a little fun while doing it. We do want to say the opinions voiced on this podcast are for general information only and not intended to provide specific advice or recommendations for any individuals. All right, y'all, we're back with another week of This Week in Real Estate. Pew, 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 pew. With Jonathan Harmon and Bryan Nale. Welcome to the show, everybody. We got the intimate setting today. A little love seat action.
Are you feeling intimate?
Yeah. I mean, I connect very closely with everybody that's watching on camera.
Yep.
Yeah.
I've already been on Bryan because when he crossed his leg this direction, it crossed the line here, and it didn't give me room to put my foot up. But look, see, I have not broken the plane.
Boundaries.
Yeah, you like my white socks, though?
I got brown socks.
Oh, yeah, those are lovely.
Nobody cares.
Nobody cares, indeed. I don't even know if that was on camera. Trent, I'm not... I'm uncomfortable with this this love seat situation.
Well, we can switch it up.
He asked if I thought we'd go with you in the black chair over there, and then you could be like Johnny Carson, and I could be like the music guy or the guest. But you came in and you sat down right next to me.
Yeah,
it seemed like that's what you wanted to do.
What can I say, Bryan? I love you, man.
So much love.
So anyway, hey, welcome back. You were absent last week.
Yeah.
We missed you. You were retreating or something, right?
I was retreating. I think y'all had a better show without me.
You think so? I
watched a few minutes of it, and it was really good.
Yeah. Missy came in, did a good job. She was not at all prepared for that. I did absolutely nothing to prep her to be here, but that was on purpose because I didn't want her to do any studying ahead. Yeah. You know what I mean?
Yeah.
Not that she necessarily would have.
Hey, we never show prep, so it always finds a way to work.
It worked out. But no, I think that was good. It was nice to go through some things that let me back up for a second. Sometimes what I run into in this business, and I know you do too, is that you sit down to have that consult, that initial meeting with someone, and you can see on their face that they have a ton of questions, but they feel like they should already know the answers to those questions.
Right.
And maybe it's because they've, been through the process once before, but it was like 5 years ago. And the reality is, y'all, the landscape 5 years ago and now are, other than the fact that we are in fact still helping people with houses, that's about the only similarity. It's like completely different.
It's a different market. I mean, and that's going to be the case. I think if you look back at any 5-year stretch,
for sure.
Especially now. I mean, things evolve and change quickly.
Yeah, and so people are intimidated, and they feel like almost embarrassed, like they should know the answers to some of these questions. And look, you shouldn't. I mean, it's okay.
It's okay.
It'd be like me sitting down with the mechanic, and I mean, I know a little bit about, working on cars.
Right.
But if it's some type of new model or some type of new technology or just something that's evolved, I don't know the answer. And I shouldn't know the answer because I don't do that.
You should focus on your niche and your specialty and your craft. And it's good to be well-rounded and know things from other industries and other crafts and hobbies and whatnot. But you can only be the master of so many trades, and
that's right.
Otherwise, you're what's the saying I'm trying to think of? Jack of all trades, master of none.
Yeah. So anyway, my point is that people get embarrassed or they're hesitant to ask questions that are quote unquote easy questions or stupid questions.
But you hit on that. You can see it in their facial expressions. You can see in their eyes, and that's the value of a face-to-face meeting. And sometimes when you're meeting over the phone, you can pick up some hesitation or that they're not quite getting it. But man, when you're in person, if you have any people skills at all whatsoever, you can easily see if this is registering and clicking, and I'm ready to go on to the next part of the process, or if we need to slow down and spend a little bit more time here. Because I always say that, like, there's so many different ways to structure the financing of a home, and it's important to me that that you can explain to your uncle at a family reunion why you chose the loan program that you chose, and that you were part of that process, that you weren't just told, An FHA loan is what you need, and this is your FHA loan.
Well, why did you pick that? I don't know. My loan officer said so. That's a bad answer,
yeah,
y'all.
Yeah, I don't want any of my customers to ever feel that's the experience that they had.
Mm-hmm. Yeah, for sure. Yeah, and on the thing about questions, I encourage all questions, and I try to look for those, and I try to say stuff like even in a phone consult, I'll ask, let's talk about agency for a second. Do you know what that means? And even when asked and given that opportunity, a lot of times folks will not take that. Oh yeah, I know what that means.
Yeah,
because in theory, yes, you do know what agency is, but not necessarily the finer points within Tennessee real estate.
Right.
Because it is different than everywhere else.
And different states have different rules. So many nuances, and it's we'll just leave that there because we could spend a lot of time diving into some of those examples. But there's a lot of differences when you go from one state to even a bordering state.
Yep. So moral of the story: ask questions. Don't be ashamed to ask them. And if the person that you're consulting with somehow makes you feel dumb for not knowing something like that, that's not the person you should work with.
Amen.
All right. Let's talk headlines, bro.
Yeah.
I just realized I'm sitting here wearing my warm cap. It's cold outside.
That's a big headline. What's that doing to the market right now? You didn't have to take it off. You could leave it on.
Well, no headline. So I thought. Yeah. Anyway, you ever heard the thing about
Trent,
forehead?
Do we need to adjust the lighting now? That
Ding! It's like the Orbit commercial. Fabulous. Yeah. But anyway, have you ever heard the thing about a forehead?
you got a 5 head.
I've got like a 12 head because my hairline's back here. Yeah. It's cold, man. And, with snow last week and cold this week, and here's that combined with the already present, there's not really like this sense of urgency at all to go see anything. Guess what? People are not going to see a lot.
I don't know.
It's picked up more.
I was going to say, this is not a national or even a local headline. This is a Bryan Nale headline. But what I'm noticing in the market right now is a lot of multiple offers. I'm calling listing agents because I feel like my buyers need the sellers to understand the situation and have that vote of confidence in a lender. That's something that we used to have to do on every transaction from 2020 to even before 2020 to up to 2022. And then, people got to where they were, hey, we're just happy we got an offer on our house. You didn't have to endorse them as a lender or call it and see if they could answer any financing questions. But now, so far in the month of January, I think it's been a pretty competitive market, which is complete 90-degree turn or 180-degree turn, I should say, from where we were in December, where it was like anything goes. I'm still seeing some concessions offered. I'm still seeing people offering at or right below list price, but they're having to win. They're not just getting the house because they're the only offer on the table.
I think that the ones that you've run into then are special because I don't think that's market wide.
It's interesting.
And I'll tell you, that's what's really interesting about this particular market is at the same time that you're seeing that one with 1, 2, 3, 4, maybe even 5 houses, I can show you 10 that are just
sitting.
They're just dead.
If you're a professional in the business, leave a comment. Let us know. What are you seeing?
Yeah.
What are you seeing? A little bit of competition amongst buyers, or are you seeing a little bit of both?
And I think that's, we talk all the time about, is this a buyer's market, seller's market, even market, whatever. And I think that's a trademark of an even market.
Yeah.
Is when something unique, something, that's been totally polished up, maybe they're offering something a little bit above and beyond. It's in the right neighborhood, whatever. When that property hits the market, people jump all over it. Now, what's crazy is there might be the exact same property across the street that's been sitting, but timing, right? Mm-hmm. So it came on the market in November and it's sitting, and maybe it's even the same price, but people aren't going to look at it necessarily
because it's older on the market. I'll say this too. I think it's another sign of a market that's starting to awaken, show some shines of life. Is that I'm seeing, and this is hopeful if you got a listing that's been out there for a while. I've seen a couple that were like, man, this house has been on the market for 60 days. We're gonna get super aggressive, and then the buyer's agent calls the seller's agent, and they're like, oh, we got like 3 showings yesterday, and we're expecting an offer already. And we're so some of these older listings are getting.
We put 2 under
pops.
contract in the last 10 days.
Yeah.
That were older on the market. One was over 6 months.
Nice. Good for you.
Totally unique property.
Yeah.
Like
Cloverfield.
Cloverland.
Cloverland.
Yeah.
Okay. Cloverfield's a movie about like aliens and stuff.
And some big monster, like out of water whale
Yeah.
thing. And then John Michael's listing over in Potts Crossing or Vineyards, whichever one it is. And both of them have been on the market for a while. And it just took the right situation. Thankfully, on both of those, we're working with with a couple of stellar agents that knew exactly what to do, exactly how to get, like on the buyer side, knew exactly like how to speak to through the offer to the sellers, and everybody's going to win in those, assuming that everything stays together, which is not always a given.
True.
So I always got to throw that caveat in there. But yeah, I mean, we're seeing the activity. It's there, and even in November and December, there were multiple offer scenarios at the same time that there were houses.
Quietness.
Yeah, exactly. So I mean, it happens. If it's a great house, if you've got a unique place, let's go, man.
Yeah.
And you want to get it out of there. This is a great time for that because there's just not a lot of that. There's a lot of flips. There's a lot of new construction.
Yeah.
There's a lot of fixer uppers.
And clearing that inventory out now before the spring rush, because I mean, I think if we expect some seasonality, we're kind of coming in on the tail end of January here, and so if things are supposed to seasonally pick up in the spring, so that people can put themselves in the school district they want to be in at the start of the fall, move over the summer months, it might get hot pretty quick. It might pick up real quick. So if you're thinking about getting into the market, you would want to get in there now.
This is a good time to start the conversation for sure.
Absolutely.
Yeah, for sure.
There's another headline. Somebody in Washington happened this week.
Oh yeah, what was that? I feel like I saw something about that. The Pete Hegseth thing. Is that what you're talking about?
Tell me about that.
I don't know. I just know that he's in the news because he drinks a lot or something. And anyway,
he's made some questionable decisions.
Bless his heart. Yeah. No. So here's the thing. We had peaceful transition of power.
Amen.
Which is great.
Yep.
And forget your opinion on whether you like the guy better, worse, or whatever. That's irrelevant. The fact that we can have a peaceful transition of power in this country with the divisiveness that is here is nothing short of miraculous, honestly. Yeah. So that's great. Pat yourselves on the back, everybody. But also, man, here's the thing: as divided as we are as a nation, that creates a fear and hesitation moment. There's a pendulum shift, and everybody's like, okay, let's wait and see. What are the executive orders going to do? Like they're done. But what is it? What's the repercussions?
How do they play out in the market?
Yeah.
And I think that there's a lot of people who are scared of the way things are going to play out, and too scared of the way things are going to play out. And I think there's a lot of people who are too optimistic on the way things are going to play out.
Yep.
And the truth is going to probably land somewhere in between.
Yes.
On those sides of the aisle. And so if you think that all of a sudden mortgage rates are going to drop to 5 because Trump's the president,
not going to happen.
That's not going to happen. If you think that they're going to shoot up to 8 because of tariffs and the inflationary things that he's talking about,
not going to happen.
I don't think that's going to happen either. But the market does kind of watch with some bated breath. And so far this week, the market has been fairly flat. There was an inflation report that came out last week that actually was beneficial towards mortgage rates, and it stopped the bleeding. It's almost like putting a Band-Aid on, and we got a little bit of a reduction in rates after what seems like a month, maybe 6 weeks of nothing but interest rates slowly going up and a couple of days with some spikes. We got a little reprieve from that late last week. And so far this week, we've held on to that and just kind of stayed flat.
Well, and flat, given the amount of movement of things that's happening. Flat is great.
Yes.
Because it could be way worse.
Right.
And any time that fear and hesitation define your market, you're not going to immediately have positive movement. I don't think. I think you're going to have some reactions. You're going to have some positive. You're going to have mixed bag. All along the way. And that has been the case. So if you look at the entire financial health of the country, it's absolutely been a mixed bag. Right. So mortgage rates have kind of done their flat thing. The stock market has been up. Other things, other issues have been down. You've got people freaking out about the tariff, looming tariffs that are been promised. And so it's, you got a little bit of everything going on. And what that does on the micro level where we are right now, where you and I operate, is it makes people just do nothing. Right. It's the whole analysis paralysis thing.
Well, I think at the end of the day, people have, families that are growing or shrinking. We have people who are getting married or getting divorced. We have all of these things that happen in life. And I think we also have a market that's kind of accepted, hey, this is where rates are now. And it's where they're probably going to stay for a while. So we can't continue to put life on hold while we're waiting for rates to get to that number that we want them to be at. And so, and I think you've also, and I'm not surprised to see this at all. I've been calling for it for a while. Eventually we're going to get to a spot where there's going to be people who have enough income to be able to convert their current home that they're living in, into a rental property. Because they recognize what they have in a piece of real estate at a rate that starts with a 3 or possibly a 2, and they don't want to let that go because they know they'll never get to borrow money that cheaply again. And if their family has grown, then and they need to be in a different home for sanity reasons, if they can do it, they will at this point.
Yeah, and those people are in the market. Right.
Yeah.
But the ones that have some type of a defining life event that is prompting that, what is not in the market are the fund movers.
Right.
Right. And so we had a lot of fund movers. For from what, probably 2016. To 2021, 22,
early 2022.
Yeah. And there's no fund movers.
And what is a fund mover?
A fund mover is kind of tired of this place. Okay, cool. Let's try something else.
I want a pool. I want a house with a pool. And you look how much it costs to put a pool in, how long the wait period was. Well, let's just go buy a house that has a pool.
I don't really like living this close to fill in the blank. Let's move to the other side of town.
I want an outdoor kitchen, but I don't want to wait for it. Let's go buy one.
Right.
Let's go buy a house that has one.
Yeah, we could expand this attic, or we could just buy a house that has this already done.
Yeah.
That's them.
That's your fund mover.
Hey man, I just got a huge raise. Let's buy a bigger house.
Yeah.
Right. And there's no no need for it necessarily. You know what I mean? Those people are, that's just not, I'm not going to say they're completely vacant from the market, but they're pretty close.
I would say so.
They're pretty close.
It'll be, and so at what point does that come back, if it does come back?
I think that hinges on confidence in the market, like confidence in the overall health of the entirety of the U.S. economy, right? Like strong confidence in it. And I think it goes back to rates. I mean, look, if you did that fund move and you got a 2.5 interest rate or a 3 interest rate or 3.5 interest rate, dude, it's going to have to drop into those probably low 5s.
Oh yeah. If you did the fund move and you're already in that fun house, it's very, I mean, you're home. You're home.
And I will tell you, renovation contractors are doing well right now.
Yeah.
They're doing well because it's, if you've got a 2 or a 3 rate, it is a whole lot easier to make an addition, to build out a garage,
HELOCs are bumping,
whatever. Yeah. So anyway, fun times. But yeah, I think the defining characteristic still is fear and hesitation.
Yeah. Trent, where are we going next? Yeah.
Do this. We need a little monitor up here. Hold, please. Oh, my neck. Oh, old guy problems.
Old guy problems.
Yeah, I've been less kind to my body. I can promise you that.
I thought he was walking on water, but okay, I see the dolphin now. Is that a dolphin in your pants? Or are you happy to see me?
Dolphin splashing, doing flips and getting her body all wet.
Look at that.
You want to buy this house because you could ride a dolphin
In your pool.
next to the bay.
I mean, that's pretty sick.
I kind of like this.
I do too.
It's clever.
I
The
thought it
palm
was
trees under his arms make it look like he has wings.
Yeah, it's a poor job of editing.
very.
But I think that's the point,
I
right?
think so. I hope so.
All right, I dig it.
There's not a lot to add commentary-wise other than that's just absurd.
Good job, buddy. Good job.
Somebody put that in the MLS. That's unbelievable.
It's totally believable. I would do something like that.
Yeah.
I would absolutely do something like that.
That's
In
really
fact,
funny.
my brain is turning.
What
right
was
now.
the listing in Murfreesboro that went viral a few years ago? Somebody we know posted it and put it out there, and he had some stuff written, like painted on the walls.
Yeah, it was a David Criswell house. Wasn't
Yeah, it was. Yeah,
it had something. Oh, it had the Epstein stuff.
yeah.
Epstein didn't kill himself,
Yeah.
but it was like painted in red spray paint, and shout out to
I thought
David.
it was black spray paint.
Was it black? I don't know. It was bright, or it was
It was bold.
Yeah.
It was bold.
yeah, good stuff. All right, what we got next?
Shiny penny.
Shiny pennies.
Shiny pennies.
Shiny happy pennies.
Yeah.
We got 2 listings under contract
Hey,
that
that's cool.
that have been sitting for a little bit. So somebody is getting a great deal on Cloverland, which if you didn't look at that listing, it's the one with the ginormous shop.
Yep.
Over 4,000 square foot shop, and that's going to be pretty cool.
What was the other one?
The other one, John Michael's listing on Turning Leaf.
Oh, that's right. Shouts to John Michael. Good
Yeah.
job.
So, I'll tell you, Bryan, when John Michael got the offer on the listing that he got, he and I talked, and it felt good. We have a mutual friend, Keith, that listened to me talking to him, and then also to somebody else about an estate situation. And Keith said, you're the happiest when you teach somebody something. Like he said, your voice changes, your whole demeanor changes talking to me. And man, it just feels good. Feels good because John Michael, look, the buyer's agent.
It feels good to be a teacher.
Yeah. The buyer's agent did exactly what they should have done to do right by their client.
Yeah.
But there's some gamesmanship, right? There's a chess match going on.
Yeah.
And so we got John Michael's offer, and he already knew a lot of the stuff, but I kind of confirmed it for him. But there were some things that, they tried to slip past us.
Yeah.
Good job, but we got you.
Yeah.
And
Did they try to slip title insurance as a seller expense
did.
past you?
they did.
Yep.
And so we said, I'll tell you what, we'll lump that in with the closing cost concession that we're countering you on.
Yeah.
And then they tried to do a home sale contingency without a 48-hour right of refusal, which that's not going to fly. They tried to do their inspections, after they go under contract on their home sale. And I was like, nope, that's not going to fly. So, and it good. They should have. That's what they should have done.
Yeah.
That represents their client the best. But
It's funny because I've got a shiny penny where I have a person under contract who, the other end of the spectrum, on the other side of the table, where he was the buyer's agent. Of course, I'm working with the buyer's agent, and he was able to put that in there, so it was in addition to the seller credits. And so, a lot of people don't realize that on the contract, it says how is title handled, the cost of the owner and lender's policy, and the settlement services fee, I think is what it is, or are they, or a title search.
it's search abstract.
Yeah.
Search or abstract.
Yeah.
And
the insurance premiums.
and I think it even says simultaneous issue.
Yeah.
So lender's policy, buyer's policy.
And so if those are listed as a seller expense, and then you've asked for the seller to pay $10,000 towards your closing costs and the discount points, whatever, those are standalone items on the contract.
They are.
And so you could end up with the seller who's paying the $10,000 credit, and then the title as a seller's expense. It can reduce the cash to close for the buyer by
Don't tell all of my secrets, buddy.
$14,000-15,000. And so what we were able to do then is because we were planning on 10,000, credit, right? So whatever, and we were able to take that title money that was going to be in addition to that and use it to buy the rate down a little bit further. So the shiny penny for that customer is his payment went down at no extra cost to him at the closing table.
So a couple of things, I like this. So let's talk contracts for a second, because there's a couple of little nuances, not necessarily in that deal, but that have been on my radar over the last couple of weeks. With this whole NAR settlement and all of that stuff, the rule changes about where we put compensation and all that. One thing that you're starting to see a lot of, understandably, is that in the purchase and sale agreement, it is buyer's agents are writing it in as
special stipulations
and special stips. Yeah. And that's fine. There's also a compensation agreement that they can use, but they want to make sure that it's in the contract.
Okay.
So I get it. That's fine. No problem. But you got to be real specific. So this has come up a couple of times where it says seller to pay buyer's agent commission of 3%. Well, where's the problem here? 3% of what?
Yeah.
Right. So you have to specify 3% of, because I will tell you this, back in the foreclosure years, it was not uncommon to do a net commission. So you would say purchase price of $100,000, $3,000 towards closing, and the commission would be paid on $97,000, not on $100,000.
Okay.
So that was not uncommon at all. So it's not a given that we know what you're talking about with 3%.
Golly.
Or 4% or 2% or 1% or whatever. Doesn't matter what the percentage is.
Yeah.
You have to specify of what.
Yeah. So I asked a realtor for a copy of the compensation agreement a couple weeks ago, and the answer was, that's not a form anymore. That form's not used. It's in the special stipulations. We put it in the contract now. The buyer's compensation agreement is a done form.
Okay.
Is that industry standard, or is that
I don't
how
know.
His broker is approaching it? Is that
Perhaps, yeah.
Like,
and the reality is the compensation, if it's going to be a concession, and this might help with the transparency, right? The compensation being part of that, you stick it in special stips.
Yeah.
It's fine with me.
And the GSEs, the Fannie Mae's, Freddie Mac's of the world, they're looking at that as not a concession. But if it starts going into special stips, does that transition over time where they do consider that?
It should be a concession.
Here's the problem when you say it should be a concession, because like with a conventional mortgage, if you're putting down less than 10% or less, if unless you're putting down a full 10%. So if your down payment or the loan to value is going to be under 90%, over 90%. If your loan to value is over 90%, then you can only get 3% in seller concessions.
I get that. But what I'm saying is this: forever, since buyer's agency existed, so in the state of Tennessee, that was in 1997, is when it was instituted as a thing, right? Prior to that, there was no such thing in the state of Tennessee as buyer's agency.
Right.
So at that moment, when that happened, the buyer hires their agent. Okay, and on our representation agreement, it says you owe me 3%, 4%, 2%, whatever. You owe me X percentage, okay? And it has a stipulation in there that says, we're going to try to get the seller to pay it, in essence, is what it says.
Yeah.
But if we can't, for whatever reason, and when I went over this with folks, I would always say, sometimes there's foreclosure situations, sometimes there's for sale by owners, sometimes there's this, sometimes there's that. In that situation, there's right there on page 1 of that buyer representation agreement, it says that the buyer is responsible to pay me as their buyer's agent, right? So that's always been a thing.
Yeah.
And what happens is, like, the mechanism is that the listing agent negotiates a certain amount of commission, right? Whatever percentage that happens to be, okay, or flat rate or whatever, right? Negotiates that on the listing agreement. And then they say, we're going to divide that for cooperative broker, however they see to do that, right? Maybe it's in half, maybe it's not. All of this is negotiable. And then back in the day, they advertised, we're offering this as commission, okay, as a buyer's agent concession, right? Well, just like closing cost, just like that, that was a fee that was incurred by the buyer's agent, and it was an optional fee, okay? So, like, for example, they didn't have to have a buyer's agent, so therefore it's optional, right? They don't necessarily have to have a mortgage lender if they pay cash. You with me? So it's essentially optional, right? And they don't have to use you where your fees are this. They could go somewhere else and the fees are this, right? And there's all kinds of, we can talk about what they're actually choosing, or I get all that. But at the end of the day, it's optional.
Yeah.
They don't have to get title insurance. It's optional.
Unless they have it alone.
Well, but ultimately it's optional.
Yeah.
Right? They don't have to. They don't have to get their own title insurance if they get a lender's policy.
That's true.
Okay.
Yeah.
So all of that stuff was optional. They don't have to do it, but it is a buyer's expense. And then the seller.
So what gets, I'll interrupt you a little bit here because it kind of goes back to what we're talking about title insurance. If it's identified as a seller expense, then it's not a concession.
Agreed. I understand that. But the buyer's agent commission is never identified as it has erroneously been identified as a seller expense for years.
Right. And that's
and
that's where this thing is. So if what you're saying it would advocate or the GSEs, the who write the guidelines for mortgages,
they need to revise their guidelines.
Well, they so far have chosen to leave real estate commission as not how it doesn't count towards the 3% or 6% or 9% concession rule based on loan to values and different program guidelines.
Yeah, and so that to me is a roadblock. That's a stumbling block, if you will, in the modern era post settlement.
Yeah.
Okay, because it should have always been shown on the settlement statement, just like closing costs.
Yeah.
As a buyer fee, right, with a seller concession to cover it.
Yeah.
And it wasn't.
It was not.
It was shown it still is not. It was shown as a seller fee.
Yeah.
Being paid to a different brokerage.
Yeah.
Well, think about that, right? Logically, who do I work for? I work for whoever writes me the check.
Yeah.
You see what I'm saying?
Yeah.
And so obviously a seller's going to get pissed off about that.
Yeah.
Wait, I'm writing a check to your brokerage and to your brokerage?
Yeah.
You don't work for me.
Yeah. Details, man.
It's important.
Yeah.
And if you think about it, that I've never thought about it until the settlement came out. That piece of the settlement statement is in direct conflict ultimately with how a buyer's representation and the whole buyer's agency structure is built. Like it conflicts.
Lots of interesting conversations today. Y'all put some comments out there. Let's get some conversation going about this stuff.
Yeah.
So if you're watching, if you've made it this far into the show, leave some comments about how you feel about if how real estate commissions should be listed on a settlement statement.
Well, doesn't matter what you think. I guess at this point they are what they are.
Well,
I guess it does because it should be changed.
They are what they are, but they're not what they are is not what you're saying they should be.
Yeah.
Fun times.
Yeah.
Trent, I think we're about done, right?
Yeah.
At least,
I hope so.
If not, we're out of time.
I'm exhausted.
Pro tip, if you want, or we can wrap it up.
Yeah, pro tip. Pro tip is hire somebody that knows what the hell they're doing.
Whenever we don't have show prep and we need a pro tip, that's what you're going to hear us say. Hire somebody that's competent, professional, but seriously, is also willing to spend some time with you to help you understand.
Well, and I'm a amend that as well.
Responsive.
Yes, and this is an ever-changing industry. So not just somebody that knows what they were doing 3 years ago. Right? Somebody that knows what they're doing right now. So if I tell you I've been in the business 15 years and in that length of time I've done 400 transactions.
But how many TikTok reels do you have?
But I've only done one transaction in the last 2 years. Well, might not be the right guy for you.
Yeah.
It's good. Good show, guys. Great show.
Love you, mean it.
Yep.
We got fun stuff coming up. Check out socials.
Yep.
Missy's got some cool stuff going on. Cedar Glade's got some cool stuff going on. Spread the Positives got all kinds of new shows and fun stuff going on.
Yep.
So I don't have time to go over all that, so just check socials.
Shouts to Greta Harmon Daniels. Love the banter. Always informative.
Ah, that's my Aunt Greta. Hi, Aunt Greta.
Hey, Aunt Greta.
My one viewer today, my Aunt Greta.
All right, y'all. We'll see y'all in the next one. Bye. Thank you for listening to another episode of This Week in Real Estate with Jonathan Harmon and Bryan Nale, your go-to resource for all things real estate in Middle Tennessee. Be sure to like, share, follow, subscribe, and leave us a 5-star review. We will see y'all on the next one.
Now for the nitty-gritty. Primis Mortgage Company is a subsidiary of Primis Bank, a member FDIC. Primis Mortgage NMLS number 1894879, BK number 1042893, ML number 1894879. As always, all loans are subject to credit approval and product guidelines. Equal housing lender.